Something like this, as you know, cannot be done by any one individual or a group of individuals. And I'm presenting this on behalf of a number of people. And I'd like to acknowledge some of them. My apologies, I'm going to miss some. In fact, if you look at the acknowledgements page or pages in the survey, it's really quite long, and I'm sure it should have been longer, so apologies. First of all, I'd like to thank the staff of the Economic Division, my colleagues who are sitting here, my officers of Team CEA, as we call it. I would also like to thank very much, the physical act of actually producing it. It takes a lot of effort. I would like to thank the coordinating unit, its head, and especially Aftab and Ashwini for really having seen through the process very carefully. Lots of people who are not here have also contributed. Don't want to name all of them, but including some people in the US who came to contribute for this, to work for this. I'd like to thank them as well. I'd like to thank my colleagues who work with me, in the Ministry of Finance, especially the two that I work closest with, Dr. Hasmukh Adhya and Mr. Subhash Garg. One couldn't ask for better colleagues like that in the ministry to work with. Of course, I would love to thank my boss, the Honourable Finance Minister, without whom, of course, none of this could happen. His support, his guidance, the cover that he provides have just been amazing in making all these 4 surveys that we've done possible. So a very special thanks to him. Last but not least this year, I want to extend a special, very, very special thanks to a group of people who kind of don't get enough, I think, credit for the work that we do. In the last survey and in this survey, we've spoken a lot about how we use big data. And I'm going to show you this year as well. We've used a lot of big data to come up with new facts and evidence. But we can work with big data only if we get big data. And we get big data, or we've got big data, thanks to numerous colleagues in government, the deputy secretaries, the undersecretaries, the joint secretaries, the directors, in their own quiet ways, they've been helping us enormously. And I'd like to thank 2 people in particular who are here. I want them to stand up, both for themselves, but also for who they represent. Mr. Nilendu Mishra and Mr. Prakash Kumar, please stand up. I'd like to thank, it's people like this who, with their generous time, support, and guidance, who make some of the work possible here. In fact, but for Mr. Kumar and his colleagues in GSTN, a lot of the work which I'm going to show you would not have been possible. Of course, the cover is pink. We just wanted to make sure that we too, in our own small way, contribute to expressing our support to the movement in favor of women and women's empowerment. In fact, there's a whole chapter in the survey on gender. So with that, let me quickly get to the economic survey itself. This year, we have 2 volumes. We've gone back to the tradition. Last year, we did it over 2 cycles. I think it confused a lot of people, and therefore, we've gone back to 2 volumes. Volume 2 is, of course, the review of what happened over the last year. And in Volume 1, we build upon that to do some in-depth analysis and research and come up with new policy ideas. Overview of this presentation, I'm going to take about 25 minutes and then leave the floor open to questions. Frank, is that a good way of proceeding? I need to judge whether all of you are alert and awake. I don't want to bore you too much. So the presentation, it's in 5 parts: achievements, the analytical review, in particular, understanding the temporary decoupling of the Indian economy. That naturally leads to the outlook for 2017-18, the rest of the year, and the next year, and the policy agenda. If I have time, I want to highlight some of the exciting new research that we've done that's presented in Volume 1. And I want to conclude with some big and big thoughts, maybe big and hopeless thoughts, but big thoughts nevertheless. Okay, what are the major achievements this year? I think that I would single out 2 or 3 very prominent ones. The launch of the transformational GST at the stroke of the midnight hour on July 1st. I think what is really important to take away also is the fact, as the finance minister said the other day or yesterday, that not only was it launched, and for something of such scale, complexity and scope, there were bound to be teething challenges. And I think it's fair to say that one of the remarkable things was the mid-course, the corrective, expeditious actions that were taken, which have led to a kind of stabilization of the GST. Second, I think that, as you all know, from the very first survey onwards, we have spoken about the twin balance sheet challenge, over-indebted firms or undercapitalized banks, which had kind of held back growth for a long time. We call that the twin balance sheet challenge. I think this year, a series of really very important steps have been taken. The resolution that's underway under the IBC and the NCLT process. And of course, very recently, the recapitalizations, actually the details were announced. I think we think of the twin balance sheet challenge as having 4 R's, recognition, resolution, recapitalization, and reforms. And I think we're now really well ahead on almost all of them. I'll talk about reforms in a couple of seconds, but I think these were very, very important. The binding constraint festering was the twin balance sheet challenge, and I think there's some decisive tackling of that's taken place. So, as validation of these achievements and recognizing India's medium-term prospects, I think for the first time in 14 years, India got the sovereign ratings upgrade. And of course, we jumped many, many ranks in the ease of doing business. So these were, I think, quite very important, even transformational achievements this year. As I said, in order to understand what is happening or what's going to happen in the rest of the year and the next year, we really need to understand what happened in the last, 4 to 6 quarters. And I think one way to think about this is to see why the Indian economy decoupled from the rest of the economy for about 4 to 6 quarters. As you can see that, for a period, India was accelerating while the world was decelerating. And then from the middle of 2016, kind of the reverse process happened. And that is a bit of a puzzle, and we need to understand why that happened to see what's going to happen going forward. I think this temporary decoupling happened. We explained that in the overview chapter for 4 reasons. First, I think there was this competitiveness impact from the 2 major policy actions, demonetization and GST. And you can see that, this is not proof, but it's all suggestive evidence that for about 1 to 2 quarters, you can see highlighted in white how exports decelerated very sharply and imports accelerated very sharply. So that was kind of some evidence that there was an impact from the 2 policy actions. Then, of course, beginning in the early to middle of 2016, our interest rates went up very sharply. See how we decoupled from the rest of the world. So interest rates affected demand. In turn, capital came in, strengthened the exchange rate, as you can see on the right-hand side. That also affected our competitiveness. If you look at the trade balance and the services balance, they were affected by that, and that also had a dampening effect on real activity. And this was, again, different from the rest of the world. That's why we kind of decoupled from the rest of the world to some extent. The 4th factor, which I'll talk about later, is, of course, oil prices. Also this year, oil prices went up. That affected consumption and the government finances, and that also held back real economic activity. So these kind of 4 factors contributed to the decoupling. And immediately you can see, therefore, what happens going forward. We see now that there is a robust and broad-based revival. Several indicators of activity. We've shown manufacturing growth, GVA growth, even investment, exports, net private transfers, credit. They've all started to pick up. The direction is very good. The level is still below potential, should keep that in mind. But in terms of directionally, the economy seems to be picking up quite nicely, quite robustly, and that's what's happening now. So in terms of the short-term outlook, remember that growth is picking up partly because the impact, the temporary impact of demonetization and GST have dissipated, corrective actions have taken. I think the government is injecting a fair amount of demand into the economy. And above all, I think that exports have picked up quite briskly in the last 3 quarters, apart from that dip that I showed you. If you look at that same export chart and look at the last 4 quarters, you will see that Indian growth is manufacturing export growth is about 11.3%, which is very healthy and kind of broadly in line with the way the world economy is going. So exports are driving growth. The temporary factors are receding. Private investment going forward will depend a lot upon capacity utilization and the progress under the IBC. Consumption, I'm going to come back, is going to be a little bit challenged because of oil prices going forward. So the growth projection, which all of you have already seen, for 17-18, it's 6.75%. It's higher than the CSO's estimate, in large part because the CSO has itself acknowledged that they weren't able to fully take account of recent developments. So I don't think they would be at all, they would contest this projection in any way. 6.75 on the real, and also inflation is higher in the second half than the first half, which they weren't fully able to incorporate. We project nominal GDP growth this year for about 10.5%. And going forward next year, because of all these factors, we think that growth will rise to between 7 and 7.5. You've, of course, seen the IMF and World Bank projections, so this is in the ballpark. Now, all projections, these are projections. They have a lot of error bands around them. Nobody is perfect. I think there's both upside potential, but there's also, challenges and risks that have to be factored in when thinking about this baseline forecast. Export growth could be greater. We find, for example, that exports are growing in line with world growth. There's a kind of a standard elasticity, but that is still lower than what this response of exports was in the previous period. So if export responsiveness picks up, export growth could be higher and overall GDP growth could be higher. And also, I think if the IBC process progresses well, expeditiously, if actions happen on time, if they're accepted without any glitches, then I think there is a chance that private investment, after so many years of languishing, could also pick up as well. But in terms of the downside risks, I think that we should all be aware of that. That there are factors that we should be very, very watchful about. If oil prices remain at current levels, I think there will be challenges. We know a rule of thumb, every $10 increase in the price of oil, GDP growth comes down by about 0.2 to 0.3%. The current account deficit will deteriorate by about, again, 0.4 percentage points of GDP, $10 billion. Inflation will be higher also by about 0.2, 0.3%. So I think we need to watch oil prices very carefully. That's a risk. Also, sharp corrections to elevated stock prices. Stock prices are elevated. I'll come back to that in a second. If something sharp happens, I think that's another risk we should. And, having seen emerging market experiences around the world for the last 20, 25 years, I think we should always be watchful when, the macro risks mount, when asset prices are high, that you get this emerging market sudden stall. There's a famous phrase, sudden stop of capital flows. But in India, I think we should worry not about anything serious, but sudden stalls in capital flows, because then macro policies will then have to be tighter. Then you get the classic dilemma between stability and growth, and then has all these consequences. So, in a sense, and you can see oil prices 17, 18 this year, about 16% higher than last year, which have held back consumption. And the IMF forecast is for another 12% higher growth next year compared to this year. So that's going to be a risk that we have to contend with. So in a sense, if you wanted to, in a nutshell, capture the current macroeconomic conjuncture, it's about both the story of revival and the story of risks. And markets are reflecting that actually beautifully. Stock prices are at record levels, which means that there's expectations of, dynamism going forward, GDP, profit earnings, but interest rates have risen very sharply as well, reflecting concerns about the deficit, oil, slightly higher inflation. So this duality of revival and risk is in some ways the current saga of macroeconomic policy today, which I think we should take account of very carefully. And of course, there is the story about the elevated stock prices, which also we should factor into account. So in some ways, when people say, what is the policy agenda? And we know that this is a very special year ahead for obvious reasons, which I don't have to go into. So I think that in some ways, my own view is that the government doesn't have to do anything new and radical, etc. Just, finishing what it has started already would be, I think, a very ambitious and a very fantastic agenda to complete. Supporting agriculture, because we know there are stresses in the agricultural sector, which are described in the economic survey. Stabilize the GST. I think that we need to stabilize GST because export refunds, compliance, revenue will still have to be achieve an equilibrium. I think we need to complete the twin balance sheet actions. I think that resolution and recapitalization must be accompanied by reforms to kind of shrink the unviable ones and to signal greater private sector participation in the better ones. Finish privatizing Air India, and no small, no mean task to head off any macroeconomic pressures and the possibility of a sudden stall from rising oil prices and possible. This is not a high probability scenario, but as they say, only the paranoid survive, and so eternal vigilance is the price of macroeconomic stability, which I think we need to have going forward. Now, so if I were you and if I wanted you to, kind of cover a few things tomorrow morning's newspapers, apart from what you may already be intending to do, I think there are 4 or 5 in Chapter 1 very important pieces of new evidence which speak to some of the current macroeconomic policy issues. For example, we find that since November 2016, there's been a big increase in individual income tax filers of about 1.8 million new and additional, over and above trend growth. The number of GST taxpayers has increased by about 50%, and there's also been some, nice boost to individual income tax collections.
All right, let's talk about earnings as well. That's, of course, the CA address, but just look at HDFC numbers that have come out. The standalone net profit, that's the one number that we have, 5670 crores. Remember, there are one-offs that could have led to this too, but the number substantially higher than what the Bloomberg estimate was. The net profit number, at least that we have until now, is much higher than what the estimate was. So we'll wait for the other numbers to come out as well. Standalone net profit at 5670 crores. Remember, they were going to report capital gains of about 5,250 crores on the sale of HDFC Standard Life as well via IPO. So this takes into account those numbers. Now the question mark only is that aside of course, this PAT numbers, whether or not one, the NII, and two, the asset quality for HDFC turns out prim and proper or no. The last couple of quarters, we've seen sporadic instances of asset quality for a clutch of mid-sized housing lenders come into a bit of a question. Whether that happens or not with HDFC remains to be seen. They've also approved raising some money via NCDs, but that's the routine part for the course. But no, I would presume that this is not a surprise, and which is what the stock is not really doing anything dramatically different from what the market is doing. It's been in that line. It's not really gone up too much, but it's an interesting number. And while we wait for the asset quality numbers to come out, we'll just be getting an analyst. We'll also get in Shraddha Babla to really talk about how the numbers are. Guys, I don't know if you have anything else on the screen with you, but it seems like the bottom line is...
yeah, you said bottom line is definitely way above what the street was estimating. I can see an exceptional item of 3675 crore, which I believe will be for HDFC. Stake sale in HDFC Life Insurance. But I think if we adjust that number, probably the bottom line is above what the analysts were actually factoring in. The NI exact growth will get you, but the revenues from the operations for the current quarter are 8667 crore versus 8133. So definitely there has been some growth which has taken place there. The total expenses for the quarter are at 5880 versus 5617. But the finance cost for the quarter is at 5545 versus 5286, which was seen in the corresponding quarter. As Neeraj highlighted, I guess the asset quality numbers will be really important for HDFC. But I think Shraddha is standing by with more details. Shraddha, any sort of clarity with regard to asset quality, and after adjusting the exceptional item which the company has given, I guess the bottom line seems to be in line with what the analysts were factoring.
Well, Navneet, actually I don't have any additional details because the press release doesn't have any details so far on the asset quality numbers, but again that is largely expected to be in line with the trends that we've seen in the second quarter. 1.14% was the gross NPA number last quarter, so let's see where that comes. But talking about the net profit number, it has come in at 5670 crores versus an expectation of 4556 crores. So while it looks like a beat, it would broadly be in line. And why I am saying that is, I'll give you two reasons. One, the big jump in the first place is because of the capital gains of 5250 crores from the stake sale that they have done in HDFC Standard Life IPO in the third quarter. They had said back then that they will make an additional provision of 1575 crores. That's 30% of that amount, which was expected to limit that bottom line growth, but they have, while the provisions for the quarter and the PNL are just at 95 crores, so unchanged on a sequential basis. But in notes to accounts, they have mentioned that 1575 crores is the additional provisioning they have done, and they have put it in the provisions and contingencies account, so that bypasses the PNL, and hence we are not able to see that effect on the PNL. So the number seems a little higher, but broadly it seems to be a good number, in line number, but the net profit number and the NII is all that I have right now.
Okay. Shraddha, maybe just do some more calculations. We'll get in Ashutosh Mishra, lead analyst for institutional equity, banking and NBFCs at Reliance, while Shraddha probably does some more calculations. Ashutosh, good having you. Thanks for joining in. What do you make of the numbers that you have so far with you until now?
So, if you look at the NII front, leaving aside the one-time gain from the HDFC Life stake sale, there also it's above our expectation. So we clearly see that the loan, expect that loan growth will be much higher compared to what we were expecting it. And this time, the bank has also disclosed on the 3rd of January that they have not sold out any loan back to the HDFC Bank, which was a normal trend every quarter. So definitely, what we will find that the loan growth will be much higher than the earlier expectation, and that is resulting into relatively higher loan growth, the higher NI growth also.
Ashutosh, if I adjust the exceptional item of 3675 on the bottom line, it's almost 2,000 crore, which is a growth of 18% on year-on-year basis. And we know we are working on a low base of last year. It was a demonetization quarter. So do you think it's any sort of outperformance when it comes to the profitability for the third quarter?
No, basically on a growth front, the impact of the base, impact of the demonetization will mainly reflect on the loan growth rather than the profitability front for the company.
Okay. And what kind of loan growth were you factoring in, and do you think you will have to revise it up for the full year?
We were penciling 18% loan growth for the company, and mainly led by the strong growth in high margin non-individual loan segment. So we will look forward to any guidance on that front.
We still don't have the asset quality numbers, but what would be your estimate here?
See, on asset quality, we are not expecting any major divergence from the HDFC Limited. In this quarter also, you have seen that they have made 75 crore of the extra provisioning. And already till September quarter, they have 1% extra provisioning on the AUM, over and above what was the regulatory expectation. So even if there will be slight divergence, it will not have any major impact on the P&L of the company.
So Ashutosh, what's the call on the stock?
We have currently buy rating on the stock. Our numbers post the management guidance.
Okay. Fair call. Ashutosh, we'll leave it at that. Thanks much for taking the time out and joining in. KK Mistry should be starting to speak any moment. In fact, I think he has started. Let's get across.
For the 9-month period ended December 2017. And what I'll do is in about 20 odd minutes try and summarize some of the key features of the results. And then if you have any questions, we're happy to answer those questions. So we had a very strong growth this quarter in terms of loan approvals and disbursements, particularly in the individual category. So loan approvals to individuals increased by as much as 30%, 30, and loan disbursements to individuals increased by as much as 27%. Now in a base as large as ours, that is a significantly substantial kind of a growth that we saw. On an AUM basis, that's an asset under management basis, the total loans outstanding on 31st of December stood at 3,84,213 crores of rupees, which represents an increase of 18% over the previous year. If we break up that 18% into individuals and non-individuals, individual loans increased by 17% on an AUM basis, and non-individual loans increased by 21% on an AUM basis. This quarter, we did not sell any loans, but if we take the last 12 months, then in the aggregate, we have sold loans aggregating to 12,078 crores during these last 12 months. So if we add back the 12,078 crores of loans that have been sold, the growth in the overall loan book would have been 23%, and the growth in the individual loan book would have been 25%. Because we did not sell any loans in this quarter, the growth in the balance sheet figure of outstanding loans is higher in percentage terms than the growth in the AUM. So whilst individual loans on a balance sheet basis have grown by 19%, on an AUM basis, as I mentioned earlier, the growth has been 17%. As of 31st of December, we had a total of 41,372 crores of loans which have been sold by us and on which we earn a weighted average return of 1.27%. So we earn income not just on loans which are appearing in the balance sheet, we also earn income on loans which have been sold by us. A lot of the lending that we saw in this last 9 months has come from loans given to people in the economically weaker sections and in the lower income group. Now, under the definition, economically weaker section means people whose income is less than 3 lakhs a month, and lower income group means people whose income is less than, that's between 3 lakhs and 6 lakhs rupees. So out of the total loans that we did, 39% of the loans were in respect of people in the EWS category and the LIG category, 39%. On an average, we approved about 8,000 loans every month for people in the economically weaker section and in the LIG group. The growth in the loan approvals over the previous year in respect of the economically weaker section was 32%, whereas the growth in loan approvals in respect of people in the lower income group was 39%. Average loan for people in the economically weaker section was 10.24 lakhs of rupees, and for people in the lower income group was 17.38 lakhs. And this compares to an overall average loan size of about 26.2 lakhs. So the average loan size has actually come down in the course of this quarter compared to what it was in the previous quarter and the quarter prior to that. So last quarter, for example, the average loan size was 26.3 lakhs. This quarter, it has come down to 26.2 lakhs. If we look at the balance sheet figure of outstanding loans and break that up between how much relates to individual loans, how much is corporate loans, how much is developer loans, how much is lease rental discounting loans, the breakup would be as follows. Individual loans constitute 72% of the total loan book on an AUM basis. Construction finance constitutes 13% of the AUM on an AUM basis. Lease rental discounting constitutes 9%, and corporate loans constitute 6%. So what we have seen in the course of this year, this 9-month period, is that individual loans has kept rising. Lease rental discounting has shown a sharp increase during the course of the last 9 months. Construction finance has been more or less stable at what it was in percentage terms compared to what it was in March. But the corporate book has not grown. The corporate book has actually come down a little bit. If you look at incremental growth during the quarter, individual loans constituted 70% of the growth of the loan book during the quarter. Construction finance constitute 26%, lease rental discounting constitutes 16%, and corporate loans actually constituted a negative 12%, giving the aggregate of 100%. If you look at a similar number on a 9-month basis, individual loans constituted 70% of the growth in the total loan book. Lease rental discounting loans constituted 15%, construction finance constituted 20%, and corporate loans was a negative 5%. The unrecognized profits on our listed investments, and here I'm talking only of listed investments, I'm not including the unlisted investments like HDFC Asset Management or our education finance company, but only on the listed investments, which would be largely HDFC Bank, HDFC Life, Group Finance. The unrecognized profits on the listed investments, which is the market price minus the cost price, as of 31st of December, stood at 1,46,203 crores of rupees. And this number, as of last Friday, was in excess of 1,69,000 crores of rupees. So there is a massive amount of unrecognized profits on our listed investments.
Okay, there weren't any kind of alarm bells as yet. Pretty calm, steady par for the course, kind of a quarter, and a pretty calm par for the course kind of message given by KK Mistry as well. Of course, keep on getting the snippets of that conversation on the ticker, but I think it's about time to get in a market voice. Sanjay Sinha, founder of Citrus Advisors, was waiting by patiently while all of this was on, joins us right now on the show. Sanjay, good having you. Thanks so much, and thanks for being patient with us. Breaking news results, we couldn't help it. But on that topic, let's start off with the key event today. From a markets perspective, do you think markets will be happy with the kind of expectations that the economic survey has, and if indeed the budget does toe the line on two or three of those key numbers?
So I think there is a certain amount of expectation and a certain amount of apprehension leading up to the budget. The fact that the economic survey paints a fairly strongly aggressive GDP growth number for FY19 is a positive thing. The fact that they have listed out the key elements which is going to contribute to this growth, one of them primarily being export, the other one being the fact that the private investment will come back on track. I think these are some of the words which the market will appreciate. But we cannot discount the fact that the maximum optimism linked to the budget is with the expectation that the corporate tax rates will be cut. The economic survey, I don't think, has said anything very specifically on this subject. The second apprehension about the budget is that there could be the introduction of the long-term capital gains tax on equity holding between 1 year to 3 years. The economic survey has been relatively silent on that also. But I think one fact that the economic survey does point out, which is that they feel that a sharp correction in equity prices will be detrimental to capital raising, and that is to capital flows. And I think the fact that the government is cognizant of the fact that they need a vibrant capital market to support capital flows, I think is a strong statement as far as the market is concerned. So on the whole, I think the economic survey does point out a fairly optimistic picture for financial year 2019.
Sanjay, well, talking about the equity markets, we've seen successive highs. In fact, markets are on a tear. We once again recorded fresh highs in terms of Nifty levels today. But if you look at the rally that one has seen this year, it's been fueled by the money which has been pumped in by the FIs for a change. And for this month, in fact, the domestic institutions so far have turned net sellers. Is that a cause of worry? Because so far the rally which we've seen in the last 1 year was fueled by the domestic institutions.
No, I would not say that, because I would be concerned if we saw the primary flows into the domestic institutions turn negative. By that, what I mean is that probably if the flows through the SIP routes started shrinking, or the amount that was being mobilized by equity fund, if that was diminishing sharply, that could have been a cause for concern. The fact that at such elevated levels, if the domestic institutions have chosen to take some profits and have recorded negative numbers, and that has been counterbalanced by the foreign institutional investors buying, I think that's actually very healthy for the market, and I think sets the foundation that in the event that we have a budget which does not live up to expectation and there is a sharp retracement in the market, at least the domestic funds will be sitting on a lot of cash which they can deploy to act as a cushion in the market.
Okay. If you look at the market's behavior over last few days or week or two, mid cap and small caps have kind of started to underperform. What is that really signaling you? Are individual investors booking profit, or there is a churn in mutual fund, or there are some technical reasons because of the SEBI order, as some fund managers have mentioned to us?
So I think there are probably multiple factors at play. One of the key factors would be the fact that in the calendar year 2017, while the headline Sensex and Nifty went up by approximately 28 to 30%, the mid-cap index has gone up by close to 50%. Now that sort of sharp outperformance that we have seen in the mid-cap segment of the market will surely raise the temptation for booking some profits. Second factor is that when the markets are at such elevated levels, we will see the domestic participants in the market surely coming in for a certain amount of profit booking. And this is something that has kept recurring in the market in the past also. Last but not the least, the technical issue about the mutual funds having to readjust their portfolios linked to the SEBI directive on what is defined today as mid cap and what is defined today as small cap, in my opinion would be a marginal factor. But I think the primary factor that has caused this amount of performance difference would be from the first two factors that I mentioned. Now, what is equally important is that what is the outlook on the mid caps for the rest of the calendar year 2018. I think given the fact that the corporate performances are now showing that the recovery is very broad based, and the fact that you are seeing multiple sectors demonstrating a resurgence in their corporate profits, this performance difference between the large cap and the mid cap is not something which in my opinion will persist for the most part of calendar year 2018, and I will not be surprised if we finish the year with the mid caps once again outperforming the large caps. But it is quite possible that the level of outperformance that we have seen last year, that level of outperformance may not be repeated.
Sanjay, which is the sector or a theme according to you which will contribute to the gains that you're talking about in the broader markets?
I think the major theme that will be playing center stage in 2018 will be the infrastructure as a whole, and that will be made up of a large number of subsectors. Construction will be one, engineering capital goods will be the other. There would also be the leverage plays which will come back into reckoning in this year. So I think as a leading sector for this year, infrastructure would be a play. The other big ticket consumption items, which would be autos and affordable housing, would also be sectors which in my opinion will get a good reward from the markets this year.
Okay. On that note, Thanks so much for joining us and giving us your thoughts, Sanjay. Always good having you. Look forward to see you more often on this forum. That's Sanjay Sinha with his thoughts on the markets. By the way, while it's going really, actually it's not going really well for the Nifty Bank. It's come off from the levels that it was trading at. A clutch of PSU banks are trading in the red as well. In fact, all the mid-sized PSU banks have a bit of a problem. But that's the Nifty PSU Bank Index trading at the lowest point of the day. But the Nifty Bank too is substantially off from the highs and is dragging the Nifty 50 along with it. Now just up over 0.5%. From the levels that it was trading at, that's a far shot down for the Nifty 50 as well. But a small cap stock which is doing well is Vikas WSP. 300 crore market cap. They received an export order over 92 crores. Quick check on what this means for the stock and what it means for the company. The management of the company, the chairman and managing director B.D. Agarwal, joins us right now on the show. Good afternoon, Mr. Agarwal. Thanks so much for joining in. Which MNC has given this order?
Actually, there are 2-3 MNCs in the China. There is a Unilever, and we are also working for Nestle. So it is a accumulative order for 4-5 and Goodman Fielder mainly in Australia.
Okay, so it's an accumulated set of orders which total up to 92 crores, is it?
Yes, sir. Yes,
okay,
sir.
and what is the execution timeline of these orders?
It is 3 months to execute this order, and it is replacing locust bean gum, the high-priced guar. That is not the guar gum, that is another gum, that is locust bean gum, and we have replaced with these products. So we have filed the patent for this product. So we are exclusively manufacturing this product for the global market.
Mr. Agarwal, what's the margin that you're expecting from this order? You've won about 93
yes,
crores?
It is almost 40% margin is in there.
40% margins. And
yes.
The orders that you've received from these multiple MNCs, is it the first time you're dealing with them, or they are your existing clients?
No, they are existing client, but this product is for the first time because it is already approved on this pilot plant. And now, for the first time, we have received the commercial order.
So what's the market size of this new product that you're talking about? And are you expecting any more orders?
Yes, we are expecting, and we have already sent the sample to other MNCs, and they are in the process of approval. So the market size, I can think it is close to $1 billion.
And you're suggesting in India you're the sole manufacturer of this, or worldwide there are more players?
No, worldwide, because India is manufacturing, or India is harvesting almost 80% of the world guar, and the rest of the guar is harvested in Pakistan. So India has a monopoly of this product. And this product is an ingredient of the food industry. So this is the product which is a new product in the international market, recently approved in the trial order and via trial order, and we have filed the patent of this product for the international market.
Okay, congratulations. Thanks so much, Mr. Agarwal, for joining me today and giving us that perspective. Bye. That's because WSP stock of about 5%. Some 3 numbers came out while this conversation was on. Inox Leisure is one, which has given a very good quarter, I might add. Forget the net profit moving up about 247%. You could argue a low base as well out there. But EBITDA margins have moved up almost 400 basis points, 360 to be precise. That's a very good operational performance by Inox Leisure in a quarter which arguably wasn't the strongest for the multiplex industries. We've been talking about how this Diwali too didn't have the best of movies coming out, so the footfalls necessarily were not the best, and which is why revenue growth is just about 10%. But the operational performance very strong, probably goes to show that the management has kept costs under serious control. And I think this used to be a problem with Inox Leisure, that in a bad quarter, their overheads used to be so high that the numbers went spiraling down. I think this time around, is showing a very strong performance on the operational front, which should only augur well for this one. Wonder what PVR would be doing. It'll be interesting to watch, but clearly from an earlier earlier move wherein PVR used to dominate how the results would be for the industry at large, and there are 2 listed players out there. Inox is probably trying to chart a different course as well. As we speak, Himadri Chemicals numbers are out as well, and a very strong bottom line performance by them in this quarter. We'll try and touch base with some of these managements as well. But to talk about these numbers and the outlook ahead, Nitasha Shankar, Senior Vice President and Head of Research at Yes Securities, joins us on the show. Nitasha, thanks so much for joining in. We'll talk about the larger macro in a bit, but since we're talking numbers, any thoughts on Inox, Leisha? Do you guys have it under coverage?
Yes, we do have it under coverage, and it's one of our topics within the multiplex industry. So I think there are a couple of things that are working in favor for the company. They had revised their advertising revenue rate cards earlier, which had led to a little bit of upwards, and which had led to a little bit of a pressure. But slowly and steadily, as the industry is sort of adopted and acclimatized themselves to those higher rates, so they've gone ahead and they should be seeing better revenues going ahead. And at the same time, the screen additions too have been quite healthy. In the past, they have missed the targets. That has also been a cause of concern. But the strict check on overheads, as well as the fact that they're going ahead with those screen additions, has borne well for the company, and we continue to remain positive on it.
Well, sequentially also the numbers look pretty good. 13 crore profit is what they posted for the third quarter, and in the September quarter it was almost about closer to 12 crore. To be precise, it was 11.6. So good operating performance, which has trickled down to a good bottom line performance, which we've seen for Inox Leisure, and the stock currently trades with gains of about closer to 2.5%. Natasha, the heavyweight HDFC too came out with its numbers a while back, though the bottom line was bumped up because of an exceptional item. But overall, what have you made of the numbers, the kind of loan growth it posted?
I think it was pretty much in lines with what we expected, except for the fact that the NIM contraction was not something that we were hoping, we were forecasting, at least for this quarter. But overall, we do believe that within the housing finance space, HDFC is definitely one of the best plays. That's why they've always demanded and commanded premium valuations, and that's something that would continue.
Okay. So that's the call coming in. Himadri Specialty, the other numbers that came out, if you look at the profit, it's up by around 3.5 times. Although market has not really reacted positively. Natasha, if you have tracked this company and had a look at the numbers?
Not really, I'm sorry.
Okay, in fact, the stock is slipping now, down 1.5%, close to 2%. Is there any additional information out? I'm not sure, but this stock, in fact, the bottom line numbers were really good.
Yeah, the bottom line numbers did seem good, but somehow the stock is failing to live up to its performance, at least the optical performance. As we speak, I think Orient Cement numbers are slated to come out, or rather just about coming out as well. So we'll watch out for those numbers too. Some very good numbers by the pump companies. So I think Shakti Pumps came out with a very good set of numbers too. I know we're discussing a bunch of mid-sized numbers that have come out, but some fairly decent numbers by Shakti Pumps too. Again, I don't know if the stock has reacted or no, but yeah, 7% higher, but not surprised there. I think it was a really good quarter that Shakti Pumps came out with. Sorry?
Himadri has revised the capex plan, and they plan to double the carbon black capacity.
Yeah.
That's the additional information that came, I think, a couple of minutes back. Is that the reason why it's correcting?
Yeah, I mean, well, typically this should be good news and not bad news, but let's see. I think this is that company.
Cash flows over capex.
Yeah, well, that too. But I think this is the company which is into that giving supplies to electric vehicles as well, if I'm not wrong. Himadri Chemicals that do supply to battery makers for EVs, if I'm not wrong. There's some electric vehicle connection that Himadri Chemical has. That was probably one of the fancies that the stock took and did reasonably well.
The stock is up over 3 times in last 1 year. I think typically after good numbers, you tend to see some bit of profit booking. Look at JSPL, the numbers were in line, and the stock's down, I guess, 4.5 to 5%, considering all these stocks have rallied too much ahead of the numbers. So what we are seeing on screen today could be a case of profit booking.
Yeah, certainly seems to, could be the case, yes. As we speak, by the way, the Nifty, just about 50 points now, so off from the highs of the day quite meaningfully. Let's talk about all of that and more with our technical experts as well. Hemen Kapadia of KR Choksi Securities joins us on the show to start off the proceedings. Hemen, good afternoon, thanks for joining in. A bit of a pullback over the last few minutes. I don't know if you have a chance to look at the charts very, very recently, but if there is a trade that you would initiate at these hours.
No, I was traveling, Neeraj. Good afternoon. It's a cool off. Frankly speaking, there's negative divergence. It's a crossover sell on the RG chart as far as the Bank Nifty is concerned. and even the Nifty is concerned. So frankly speaking, Neeraj, not very surprising. The open interest opened with 2.5 CR as far as the Nifty is concerned. Bank Nifty with around 23 lakh shares, significantly higher than the last settlement. VIX is what? 17.95. Budget on hand. I think it's very disconcerting. I'd say no, don't do anything, stay away. The market is itching for a correction. Nothing wrong. We've had a brilliant run up. We are in an uptrend. But I mean, anything little bit awry, haywire, to anticipate it. I'm not saying that budget is going to be this, that. That's not my subject. But anything here and there, I think the market is looking for a correction. Mid caps and small caps anyway are still not participating. So I'd be very cautious. Frankly speaking, I wouldn't do anything. Can't short. Anytime you think of shorting, the very next day the market turns on and gives you a resounding slap. So can't short. Too late to buy, too early to sell. I'd say stay away and wait for the budget to implode. The VIX will fall considerably. So I think there should be some sensibility creeping in there.
Individual stock ideas, I mean?
Individual stock ideas. I like Sun Pharma, Navneet. I think that looks interesting. Sun Pharma looks like giving a breakout. It is slightly positive. So a buy on Sun Pharma at around 585. The stop loss of 570. And a target of 615, positional call. India Cement is oversold. I think that's a counter call. Buy it at slightly lower at 170. Stop loss of 164 and a target of 182.
Cement has come off meaningfully from the levels that they were trading at. I remember a brokerage note on Sanghi came in at 127. The stock rallied all the way to 140, 145 thereabouts. But post that move, Sanghi Cement is what I'm talking about. Sanghi Industries, that's trading back at 127. A clutch of other names have come off. Counterintuitive, Natasha. You would expect that if the budget is all going to be about infrastructure, then the natural correlation is cement. Is it that people are tired of hearing that story about infrastructure and therefore go out and buy cement and valuations are a bit too steep?
I think what happens is anytime there's any positive news on infrastructure, you see the cement stocks soaring to new highs, despite the fact that those volumes have not started picking up, earnings have not started picking up, and I think that that's largely the case this time around as well, which is why you're seeing a lot of profit booking happening. People are tired of listening to the news part of it, and they want to start seeing it on the numbers now. So probably this is a good time to start fishing for some of the good names within the cement pack, because at the end of the day, housing as well as infrastructure will remain a focus for the government, and that would drive the demand for cement overall.
Natasha, what about Maruti? The numbers were pretty much in line. 100 bips improvement in margins will be positive for the company. And this is one company which is very conservative when they give you guidance about their margins. I remember for FY18 they said 15%. I think this time around the margins have been above that. At these levels, I'm sure most of the analysts would say valuations are stretched, but is there still value left in the stock of Maruti?
So I think this is an argument we've had in past about some of the stocks as well, that valuations are stretched. But if it is a stock which is delivering returns, it is coming out consistently with a margin improvement, maintaining good healthy ROEs, then why not? Why not pay the premium and have that stock in your portfolio?
So, one reason why especially Bank Nifty is down could be what is happening to bond yields, which are at almost week's high, I would rather say. Since 17th or 18th Jan, we haven't seen 7.35 number that is there on my screen now. So you could say that the day government announced that they are not going to borrow as much as we thought earlier, these yields were not seen till date. Now, one possible reason could be the indication from economic survey that even for next financial, the target could be moved up from 3.0 to 3.2. And since then, the yields have been inching up. Maybe there are other drivers also, because for last 3-4 days, there is a strong uptick. Should one really worry about this, Natasha, if you're invested in a banking stock? Would you worry about what's happening to bond yields, and would that be a big risk going into the budget?
I think whenever you're investing in banks, bond yields will always remain a risk, but not to the extent at which it is being playing out. We do think that the banking stocks have already adjusted for the rise in yields that we saw. And in case there is a miss in the budget, or if there is any kind of a revision upwards on the fiscal deficit side of it, or any kind of a side on the borrowing side of it, which could impact the bond yields, the stocks would adjust very quickly to it. So it's not it is a risk, but not as major a risk as one would want it to be.
I mean, Indiabulls housing on the charts, that stock's been on a tear. We've seen good returns in the past few trading sessions, and today as well it's trading with good amount of gains. Would you take a fresh bet here? Let's say if somebody's already taken a long, what should be the target?
Fresh bet, yes, but then I'd have to keep today's stop loss NSE cash low as 1390. So I'm not sure if the risk reward ratio would justify 1 to 2, but yeah, position hold. In terms of target, we're looking at something in the range of 1465 now, and the way it's moving probably happened this week itself.
I mean, I just wanted to check. I'm sure the volumes today in the derivatives market are low. It's day one of the new series, but some of the reports were indicating that exchanges, the SEBI has actually asked the exchanges to ask their clients to give more deposit for clients who have more exposure in the derivatives market, considering the volatility is high, markets are at all-time high just before a crucial event which is lined up this week. Is that true? Well, the clients have been asked to give more deposits?
I'm not very much aware of the back office, but yes, from whatever I've been given to understand, I think that is the case somewhere, and I think there's also the, I think in the new settlement, I think the
that's for the March series, for the which is linked to MWPL, that comes into effect from March.
Yes, so those 60% and all those, so the exposure is going to go up dramatically. So I think the market lot reduction should be a considered option rather than tax or burden the investor, speculator, trader so much that he leaves the F&O completely.
Provided you want the markets to really go up.
Yeah, I think...
I don't think any of these moves are linked to a market direction, right?
No. This is not linked to market correction.
Market direction, I mean.
I think they don't take these moves. There is no default from the clients, considering the markets have gone up. And as Hemain said, we've entered into the new series that open interest for Nifty futures is, I guess, near record high, 25 lakh shares. Precisely that's the reason, because a lot of retail and clients are taking more bets on the F&O side.
So some brokers that I have spoken to also told me that this is a regular practice that, whether or not there is any circular or any orders from the regulator or exchanges, 3 days before and after the event, they themselves ask for...
I think there were some letters written to some of the trading members is what I was reading. I don't think there's any circular out, which is the letters have been sent and they've asked their respective clients to give more deposits.
So it's done by brokers also.
So safeguard policy of sorts. Okay. By the way, just before we get in our next guest, since you're talking cement, Orient Cement numbers are out and it is been a pain quarter. EBITDA down, loss has widened and it's showing in the way the stock is reacting as well. I think down about 4.5%, now 5% down for Orient Cement. So we're just talking with Natasha a while back about not necessarily all cement companies being able to show good numbers, while the others that have come out until now have not been too bad, save for one or two. Orient Cement certainly not amongst the scheme of things, not amongst those companies which have delivered a good quarter. In fact, it's been a very poor quarter for Orient Cement, and therefore it's showing in the stock. Just wondering, do you have this one under your coverage?
So within the cement pack, we prefer Ultratech as well as Prism Cement and not really Orient Cement. So we do have a sort of a sell on it, neutral on it rather.
You have a neutral on it, okay. And these numbers, and I don't know if these numbers make you change it, but certainly not the best of quarters. Okay, before we move any further, Sumit Bagadia, I'm told, finally we'll be able to get him as well. Choice Broking joins us right now on the show with his ideas too. Sumit, just wondering, what are the stock-specific recommendations that you're making at this hour? Let's start off with those first.
Hi, good afternoon. The markets are all looking good to me. So we have selected a buy stocks for the day. And the first one is from pharma space, and that is Sun Pharma. Sun Pharma is looking good to me. I think in next couple of days we can see a good upside move in most of the pharma counters. And as far as Sun Pharma is concerned, we can see a move till 625, 640 levels. So for a trading perspective, one can initiate long positions in Sun Pharma at CMP with a small stop loss to be placed at 575 levels on lower side. And on higher side, 625 can be the immediate targets. Once if 625 is taken away convincingly, then we can see extended move till 640 levels.
It's a call coming in from Sumit today. JSPL is one of the traders' favorite. Hemain, if you have had a look at this one, down 4.5%, maybe following the Kotak report that has cut it to reduce. What's your take on this one?
I think we've had a run up. I'm not sure beyond that there is anything which has changed. We've had a scintillating move, 120 to 294. We're seeing a cool off coming in, and this cool off might get extended because we are seeing a crossover sell by some of the mechanical indicators. And I think we are due and overdue for a correction. But if I were to take a slightly longer term view, we are heading towards 350 if I take a 1 year time frame. So
where do you buy?
Sorry?
Where do you buy for that target?
Where do you buy? I'd sort of stagger my purchase. The first purchase would come in at around 245, and then every 15 rupees lower, I'll keep on adding.
Okay, let's look at what's happening outside of Maruti, but within the index. There is some real strength that we're seeing in IT. TCS, for example, is up 2.5%. Select mid-cap IT names haven't done too badly. Now, here's the conversation that I want to have, Natasha. I mean, for all the faults that you can find with momentum, TCS post Jan 1st has bagged orders northwards of $5 billion, closer to $6 billion. So we may talk about slowdown, or we may talk about the green shoots of recovery in Europe, which is leading to orders coming in for TCS. And maybe others have not bagged orders in the same vein, but I'm guessing this wouldn't be restricted to one company alone. A batch of Indian IT companies would probably be getting these orders.
Absolutely.
So previously, the call was that valuations are in your favor. Go out and buy IT. There is not too much of downside. My question is growth likely to make a bit of a comeback for IT companies?
So we do think that there would be a bit of a growth coming back for the IT companies, especially from Europe. And also, you know, we've started seeing that happening, that gradually digital is becoming quite a prominent part of their revenues, and it started giving some meaningful contributions over there, both in terms of the deal sizes as well as the deal pipeline. So as that momentum picks up, so it would bode well for the companies which are already invested towards it. That would include TCS, it would include companies like Persistent Systems, Mindtree, and we've seen that kind of momentum coming up in those particular companies' stock prices as well. But one has to be a little careful when you're just trying to generalize for the sector, because not everybody is receiving orders, not everybody has the bandwidth to try and cater to any kind of growth that may come over there. But yes, for the better companies, the growth is expected on the anvil, and we would definitely be recommending an accumulate over there.
And it wasn't particularly the best of quarters for Persistent, I thought. I mean, yes, they expanded margins, but I thought the commentary was a bit iffy. Some orders which didn't materialize could materialize, but don't quite know whether it'll happen in Q4 or later on.
So I think there's still a lot of uncertainty left, but at least
IT at large or for Persistent?
For Persistent in particular, because they've had some issues related to some of their customers in the past, and even this time around they were a little cautious when it came to giving an outlook. But overall, they are seeing signs of recovery, and there are offshoots of recovery. It would start boding well. They've made the investments and the capex from their side of it, and it's just a question of time before things start to materialize for them.
Okay. You know, Emphasis is not doing too badly, but I can't say the same for a clutch of other names. By the way, what's gone off, guys, amongst other names is also Avenue Supermarts. Started off 6-7% higher, but now has just cooled off a little bit. Still up 3.5%, still expensive, but off the highs of the day quite considerably. A
good set of numbers, Neeraj. Double-digit margin from a company from a retail company is not expected in India. In fact, Walmart doesn't post that sort of margins. They're only just about 7.5% to 8%. But yeah, the stock's done so well. The 9-month performance of this company has been so. I think the profit figure has way surpassed what they posted full year in FY17. So good going for Avenue Supermarts. Yes, it is off day's high, but as we've been saying, stocks which have rallied, they're seeing some bit of profit booking in today's session. But Natasha, do you guys track Avenue Supermarts at these levels? Once again, I'm not going to talk about valuations, but they're showing good performance quarter after quarter.
That goes on to, you know, just reiterating the same fact that companies which are capable of performing. And it's also important to look at the outlook, especially post GST and demonetization. We've seen a sizable shift of demand from the unorganized sector to the organized sector, particularly in the retail space. And companies like Avenue Supermarts, or even Future Retail for that matter, they would continue to benefit from it. And
you like Future Retail. I remember now, since we've had this conversation in the past, between the two, which according to you can give you more returns in the near future?
So I think if you're looking purely in terms of valuations, probably we would prioritize Future Retail over Avenue Supermarts, but otherwise we're quite indifferent towards the two.
Okay. It's 2:45. In just moments from now, of course, we'll be getting you all the updates live from dealing rooms. These next 3 days, we are present at some of the largest dealing rooms across the city to try and tell you what is it that dealing rooms are thinking of the budget and the run up to the budget as well. Today, of course, Jayesh will be present at the Edelweiss dealing room and getting in some of the key voices from there and a mood check of sorts. So we'll do that in just moments from now. But let's, just before we get there, let's get in Nikki Mirchandani, who's talking about the buzzing stock of the day, and that is Bagaria Industries. Came out with a very good set of numbers. Nikki, what did you make, and what's the trade telling you?
Sure, it's a good set of number that you just mentioned that the company has reported. On back of that, we've seen the stock rallying as much as 20% to its highest level that we've seen since October 2017, and also its highest level since May 2017. Volumes remain pretty much strong for this counter at 32 times its 30-day average volumes on NSE. On back of earnings, as we just mentioned, if you look at the basic numbers, net profit here, it's a multifold jump that we're looking at 15 odd crore as compared to 6.4 odd crore. That's a 2.5 fold jump that we're looking at the net profit front for this company. If you look at the EBITDA, it's a operationally healthy quarter for the company. The numbers have risen by 158% to 25 crore as compared to 9.7 crore that we've seen in the corresponding quarter. Revenue was up by 18%, and the margins have shot up to 28% as compared to 13% that we've seen in the corresponding quarter of the previous year. Now, cost rationalization along with your higher revenue has led to good operational performance by the company. Raw material cost, that as a percent to your net sales, has overall come down to 52% from 60% in the corresponding quarter. Job work charges have also reduced to 13% from 18%. Besides that, we've seen a sharp jump in other income as much as good 141% to a number of 4 odd crore as compared to 1.5 crore, which has in turn aided the bottom line growth of the company. Besides the operational efficiency, if you look at the revenue breakup, we are looking at a solar power business which has registered a multifold jump at a number of 7.4 as compared to a less than crore figure that we've seen in the corresponding quarter. Also, if you look at the chemical business, it's a good 10% jump there at a number of 82 odd crore. In terms of EBIT performance of the company, you would see solar power business, that particular business has turned around, and we're seeing a loss to profit kind of situation with a number of 4 odd crore for this business. And chemical business, that's also a multiple jump there at a number of 19.52 as compared to nearly 9 odd crore that we've seen in the December quarter of the previous year. Back to you guys.
Okay, Bagaria Industries, that's the stock. Thanks, Nikki, for the update. Natasha, have you tracked the stock by any chance? Are you tracking Vakrangi? That's another stock which has slipped in today's trade, down 3%. There is some fear that there could be an investigation following a heavy price volume movement at this counter.
So we have heard that news, and prior to that we were positive, but right now it is under review.
Okay, what's up? Suven Life has inched up 13% odd. Emphasis and L&T Infotech are amongst the two names which have had a good move today. We're talking about mid-cavity gains, and look at those two. But in particular, off the highs of the day is Emphasis, but still up about 2.5% apiece. Canfin Homes has some gains to itself, as does HDFC, by the way, 3.5% now up. So 1978 and counting, that's a heavyweight that is piling on the gains. I would guess this would be amongst the top contributors to the index currently. In fact, I wouldn't be surprised if you pull up the contributors list right now, and it's not really rocket science, but HDFC would be amongst the top contributors. Sumit, is there a trade that somebody can initiate on HDFC at the current levels?
See, the overall counter is looking very good. It has given a one-way move, and looking at the chart, it seems that from here on there is a possibility that we might see upside move, in which we can see levels of around 2000 as an immediate target. And if 2000 is taken away convincingly, then there is a possibility that we might see a fresh upside move around 100 to 150 points above 2000 levels. For a longer term time horizon, yes, one can initiate long positions in HDFC at CMP, and if anyone wants to initiate long positions for a trading perspective, then also I think one can initiate long positions in HDFC at CMP with a small stop loss to be placed at around 1940 levels on lower side, and on higher side 2000 is a resistance, that is a psychological resistance. Once if the 2000 levels are taken away convincingly, then we will see a move around 100 to 150 points. That means on higher side there is a possibility that we might see levels of around 2100 or 2150 levels.
Well, you've got these pharma stocks which are reeling under pressure, so to say. Fortis is down 6%. Remember, Dr. Reddy's numbers were not so great. The stock was down on Thursday as well, and today it's down almost 5.5% in today's session. Himin, anything here? Dr. Reddy's Fortis, would you initiate any sort of position on the short side?
Sun Pharma looks, frankly speaking, more comfortable, and I know it's slightly off track, but Suven looks brilliant. And despite the move, I think it has a...
You buy it now? It's up 13%.
Yeah, so I wouldn't buy it now, but I'd wait for the small cool-off. It was one of my Diwali picks. I still think it's got a long way to go.
Okay, so that's the view on Suven. Natasha, are you tracking this stock as well? It's up 13% in today's trade. Suven Life Sciences.
Not this one. I think within the pharma space, we're only positive on Aurobindo Pharma as well as Granules India.
You know, I must add, while we're talking about being at new highs, there's a clutch of not really small cap or micro cap, but mid-sized names that have come off quite substantially from the levels that they were trading at. So look at Growth Finance, for example, as premium quality as quality would be. And the 1 month chart of Growth Finance will tell you the story. It is down 6% today, but that is more incidental. If you just look at the last 1 month of Growth Finance, you will see a huge peak and there a pullback, which has been quite substantial. This people who got in on that Friday when the stock was up about 15-16% have really been caught on the wrong foot. Look at what's happened to Indian hotels, albeit not in the same vein, but I think from levels of 158, 160 odd, Indian hotels is down to 141. Trading stocks like GVK Power, for example, up to about 25, 26 levels. And just bring up the 1 month charts of each of these, please. GVK Power is one more example wherein you'll see the stock having moved up all the way to 25, 26 or maybe higher and has come back to about 20 odd levels. So that's a sharp pullback as well. So while we're talking about all-time high levels on the key benchmark indices, there's a bit of a disguised sharp correction that is already underway at the broader end of the spectrum and not necessarily the small cap end of the market. This could well be considered the mid cap end of the market as well. Are clients booking profits out of expensive stocks? Are you making them do that currently?
So something which we always advocate and something which we continue to believe is that one needs to be very disciplined when it comes to investing. I mean, it's possible that you sell the stock at a 25% gain and it may go up another 25% after that. But as long as you've made money, you should just be happy about it and not get too greedy. Similarly, if you are expecting the stock to go up by about 30%, 40%, and such kind of conditions, any kind of correction that you see over there, just use it as an opportunity to accumulate more and then hold on to it. So that's what we advocate and that's what we still continue to believe in.
But is it possible for you to assess what is the reason behind that? Like we have been discussing this for a while now, that the broader end of market is not doing that well, while index is holding on, it's kind of masking the correction which is underway in these liquid mid-cap stocks. So is retail selling before an event? Is it some kind of pressure why people have to exit their trading positions? What's really happening?
So I think at least largely based on what we've seen as a trading pattern or an investing pattern within our clients, I really cannot speak about the rest of them. But yes, they have been booking profits at higher levels, purely out of investment discipline, nothing more than that. I mean, they're just pulling out the profits part of it, not their invested capital side of it. So probably that's one of the reasons why you're seeing this kind of correction.
That's really encouraging. Let's go across to the dealing room check now to get a mood of what's really happening at dealing room with regard to the expectations from the union budget this time around. Let's head across to Jayesh Khilnani, who is in conversation with Vikas WSP at Edelweiss. Jayesh, over to you.
Yes, Pradeep, indeed, a very special voice that we have today with us, Vikas WSP, President and CEO of Edelweiss Securities. Vikas, thanks for taking the time out and speaking with Bloomberg Quint. Now, you know, this is the last full budget that this government has before the general elections, and broader expectation in the market is that it's going to be rural focused or, you know, agri focused. So what's the expectation in-house?
So I think, you know, as you rightly said, that markets are looking for, you know, how government is going to do, what government is going to do to revive rural economy, and also on the infrastructure spending, capital spending. I think that is the need of the hour. While this government has made a lot of, you know, their intention very clearly through various, you know, interviews, and that I think they are going to spend on, you know, focus on that. So I think that expectation obviously very well said. Secondly, I think given markets are looking for what kind of fiscal path, deficit path, I think this government chalks out. Like that is where a little bit of worry is building out. But I do believe that I don't think this government, given their track record and commitment, would lose focus on fiscal consolidation. I mean, this year there might be a little bit here and there, but I don't think markets are really worried about that. Markets are really looking forward for next year's guidance. That will be critical. So I do believe that this budget is going to be very good budget. I don't think they will do anything to disrupt right now either economic revival or market expectation or market momentum.
And the other big focus of this government has been on the housing side, especially the affordable housing. What kind of expectations do you have? What reforms are you looking for in that particular segment?
So I think last year affordable housing, they made it very clear. They allocated fairly large amount of money, I think about 20,000 crore if I remember correctly, and that was a fairly large allocation for supporting the investment in this segment. I think the key thing out there is not really anything else but execution. So I don't think budgetary allocation would be a big problem. You might see another similar or more kind of allocation in the budget for that segment, because I think affordable housing is one thing where it has impact on living standards, it has impact on job creation, it has impact on all the tertiary markets, I mean like cement, steel and everything else which household uses. So I think this is a very good economic revival tool, and it's a great thing to happen. So I see government should allocate more and more towards this, and they should accelerate before they get into election season.
And do you have any top stock picks in the affordable or the real estate space?
So we like the entire segment, from housing finance, and I think real estate as a segment we like a lot, especially the players who have huge amount of credibility behind them for delivering products, and I think who has good balance sheet or size, decent balance sheet will do well. So structurally, I think after RERA implementation, you will see this segment become a lot more investable, lot more structural growth oriented over the next 5-10 years.
Sure. Let's talk a little bit about the markets. Very interesting time. Nifty is at lifetime high. Oil is at beyond 70. Gold is moving up, and yields are also moving higher. Something has to give up. What's the dealing room chatter that you're picking up?
So I think this is very interesting. It's going to be interesting this year, especially given the markets level where they are. So two things are happening. I think the revival in the economy is happening. Corporate earnings are really picking, which we've been waiting for so long. So I think finally we are seeing that. And at the elevated levels of market in a shorter term, how do you invest when you see micro improvements and macro risks surfacing, and that makes investors' life reasonably difficult. So I think it's going to be challenging here, but I think idea is to stay focused on fundamentals and take the short-term movements into stride. I think there are lots of sectors. This earning is going to be pretty broad-based, and that makes it very, very interesting. So there will be sectors and like corporate-facing banks. You are seeing reasonably good amount of revival. You are seeing capex picking up in infrastructure. EPC companies are going to do well. So there are lots of segments. IT has started doing very well. So you will see some of the defensives will start doing very well, and there are areas where one can invest. So I think it's going to be difficult, but I think that's what makes it very interesting.
Definitely. Talking about the earnings, currently we are undergoing Q3 earnings. So what have you made of some of the earnings so far?
It's been very robust, I think. So I think across the board we have seen volumes picking up. Across the board we have seen margins kind of either stabilizing or getting better. So I think impact of DMON, GST, everything is behind, and I think now really demand pickup is happening across the segment, and I think that's a good situation. Typically when the demand recovery happens, it does not last only for 1 or 2 quarters, and that's why I said we will start seeing significant micro level improvements. Demand recovery doesn't last for long, and I think there are a lot of sort of tailwinds from a government spending perspective, income levels going perspective. So I think all those things are going to support demand and also capital expenditure perspective. So I think in that sense I continue to believe that we will see a very robust corporate earnings environment over the next couple of years.
Sure. One final question on the flows aspect. Now, last year the market rally was supported by domestic flows, and this year we've seen a return of the FIIs. So do you think that will continue and drive the markets higher?
So I think FI money will continue to come in. I think what we have seen so far, domestics have ruled the markets, but at the same time I think FI money has been a little bit of slow to come by. But I think if the dollar were to kind of remain weak as we are seeing, and which I think probably expected this throughout this year, you will see flows coming towards equities in emerging markets, and I do believe that we will continue to see reasonably good flows towards India. Obviously, a lot needs to see. It depends on how things pan out globally as well. But I don't see why we will not attract good FI flows this year.
Sure. Thank you so much once again for speaking with Bloomberg Quint. Back to you guys in the studio.
Thanks a lot for that, Jesh. So that's the word from the Edelweiss dealing room. What we'll do is take a quick break on the note that the markets are up about 0.5%. The Sensex actually up 283 points. On the other side of the break, get in some final thoughts from Nitasha Shankar, yes. Also get you what the Fab 4 stocks for the day look like, and some dealing room chatter, what are dealing rooms talking about specific stocks, and of course closing strategies from both our experts.
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में। बढ़ो 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 मेरे संग।
व्हाइट शर्ट्स कितने प्लेन और सिंपल। फॉग सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses, or large businesses, or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint. Back with countdown right here on Bloomberg Quint. Just before we move any further, final thoughts from Nitasha Shankar as well. Nitasha, today you spoke about pharma when Pradeep asked you about Suven. Large cap pharma is taking a bit of a pummeling today. Now, again, what is this? Is this a hope rally fizzling, starting to fizzle away and some bit of profit booking happening there? Or is there something else? Reddy's, Lupin, you name a large cap name, there's under a bit of pressure today.
I think if you're looking at the fundamentals, pretty much all of them are cloudy at the moment because of the structural changes in the industry. The generics are not going to give them that much of a margin as what they were giving earlier. The industry is opening up. We're seeing pricing pressure across all geographies, not just in India, but in US as well. So because of that, there's not been any major improvement on the fundamental side. And of course, the stocks had taken a severe beating. And there was a hope that they may recover, but at least in our opinion, the recovery is still a while away. So we would prefer to stay away from the large cap names. And like I said, I think the only two names we are positive on within the sector is Aurobindo and Granules India.
Great, good. Good having you, Nitasha. Thanks so much for taking the time out and being with us today. That's Nitasha Shankar from Yes Securities on with her thoughts on the markets and specific names. Speaking of specific names, it's time for our segment, the Fab 4 Stocks of the Day. And Yash Upadhyay Johnson with what's made it to his list. Yash, good afternoon.
Good afternoon, Neeraj. So first up, we start with Avenue Supermarts. It was an operationally strong third quarter for Avenue. Net sales adjusted for excise came in 23% higher to a little under 4,100 crore rupees. Net profit too saw a 66% jump up, with margins seeing a significant expansion of almost 200 basis points on a year-on-year basis, and the stock surged as much as 9%, but has come off from those highs and is sitting at gains of about 2% or so. KSB Pumps is not far behind, gaining almost 5% today after the company said that it has received an order worth almost 400 crore rupees from the Nuclear Power Corporation of India. Now the order is for the supply of coolant pumps and electric motors, with supply starting as soon as 2022 onwards. Emphasis is another stock that we're looking at, and the stock had hit a fresh 52-week high today of 925 today, with volumes too coming in significantly higher. But the key trigger today has been brokerage firm Antique upgrading their recommendation on the stock from a hold rating earlier to a buy rating, while they've also raised the target price to 965 rupees versus just 710 earlier, indicating a potential upside of almost 17% from its previous day's close. And finally, we are also looking at Suven Life Sciences, and the stock is up about 12%. It has been gaining for a fifth consecutive day, going from the levels of 198 and a half to upwards of 250, almost gaining nearly 24.5 to 25% in that period, with volumes too coming in substantially higher at 11.5 or 12 times the 20-day average. Back to you.
Well, thanks a lot for that. Certainly the pumps company is doing well. KSB is one that ordered. Shakti Pumps came out with a very good set of numbers, and we can see their gains on both of those names. Do you track either of these two names? They're not typically trading stocks, but the volumes, at least on Shakti Pumps, very high. Sumit Bagadia, any thoughts here?
Shakti Pump, right?
Shakti Pumps and KSB Pumps.
Yeah, see, Shakti Pump is looking strong on charts. Stock is given a good move in last couple of months, you can say, and now the stock is quoting at around 566 levels. I think from here on there is a possibility that we might see extended move in which we can see levels of around 600 as an immediate target. In last 10 to 15 days time horizon, stock has given a good move from the levels of around 410, 420 levels, and now it has crossed the highs of 550, 560 levels which were made in the August or September 2017. If the closing is seen above 560 levels, then there is a possibility that we might see extended move till 580, 600 levels in next couple of days. So for a trading perspective, one can initiate long positions, and those who have taken long positions at lower levels, they can hold on the existing long positions with a trailing stop loss to be placed at around 540, 545 levels on lower side for the upside target of 580 and 600 levels in next couple of days.
Okay, so a kind of fresh breakout above 560, that is what Sumit is suggesting in Shakti Pumps, and that's an interesting stock. What you mentioned, if it manages to close above this level, then we could see further upside. Emphasis, if you have looked at this chart, any views?
Sorry?
Emphasis is moving up because of the upgrade coming in, but how does it look technically?
Frankly speaking, firing on all cylinders, Pradeep. Short, medium, long, daily, weekly, monthly, every time frame we are in an uptrend, and we continue to remain so fresh, all-time high. Don't have any levels, but I'm not sure if it's a fresh buy, but if it's already a buy, it's a hold. I think clear blue sky. I think further upside seems possible.
I mean, what about NIT Tech? Last week was great for this company. I think the stock rallied almost 25% or so. But today is the day when there's been a bit of profit booking. But if a stock is down 4.5 to 5%, and if somebody had taken a long position here, considering the trend last week was on the upside, will the stop? What would the stop loss be if, on your chart, does it indicate that the stop losses would have been hit by now?
A progressive stop, frankly speaking, should have been hit because 5% is significant no need. So, but if you still haven't, I have a feeling that the intraday low of yesterday in the cash market on NSE was 842. I think that can be considered as a stop loss. The bigger picture seems fine, Navneet. And maybe digressing just a bit, the smaller NIT also looks pretty interesting on the longer term charts, Navneet.
Okay, NIT snapped 5-day gains is what our producer tells us. But besides that, one stock which has been quite strong since the morning session, and it's one of the FNO securities, Canfin Home, Himain 4.5% higher at 462. Would you take a fresh bet?
No, I think it seems more like a small bounce back, Navneet. If you look at the bigger picture, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 13 weeks of a sideways movement, Navneet. No directional bias. Range is roughly between 440 on the downside and 510 on the upside. So till it breaks out above or below, I'm not sure if it's a position worth taking. It seems more like a intraday bounce. But yes, the volume is highest in the last 3 trading sessions. So obviously there has been some near-term interest.
By the way, I must point out Tech Mahindra. That one is now trading, I think, close to the day's highs ahead of those numbers. So sharp move up on Tech M in the session, right now in the session, ahead of the numbers. The numbers come out in about maybe 20 minutes from now, maybe might come out during market hours as well, you don't know. The press conference later to happen at about 3:45 p.m. So we'll wait for those numbers, but certainly looks like there's a bit of a pull up ahead of those numbers there. Difficult to trade these stocks because you don't want to put the viewer at a disadvantage by getting him a view and then the stock going the other way post the numbers declaration. So we'll avoid taking a view on Tech Mahindra right now. But I do want a view on Eicher Motors. For a really long time in the last series, Heyman, it looked like it was under a lot of pressure, gave up a lot of gains. Now just bouncing back. The last few days we've seen 2 or 3 days of strong up moves. Is it trying to find a base?
Absolutely, Neeraj. I think what you spoke made a lot of sense. We saw a low of around 26,400 in June of last year, Neeraj. And last week we saw a low of 26,200. So it's not double bottom, but it's taken support at its earlier intermediate bottom of nearly 10 months ago, Neeraj. So, and because of that support, we're seeing a bounce. And this bounce might get even better because the volume on the low, which was on Thursday, Neeraj, was highest in the last 3 months, if not 4 months. So interesting buying, and that level has been protected. So I'd say strong hands are bought.
Well, let's see if indeed that buying leads to something. In moments from now, we'll also get you what the dealing room chatter is. Jayesh, of course, gave you a sense of the Edelweiss dealing room, but Darshan and Yatin, of course, will give us a sense of what's happening across multiple dealing rooms as well, and what are the stocks to focus on. While we wait for that, must mark Bharti Infratel, which is up about 3%. So that is doing okay. And must mark Bharti Airtel, 2.5% or over 2.5%, 440 now. So this one has come off. I would guess Idea too would be under a little bit of pressure today. Though I haven't seen the stock today amongst the top gainers or the top losers list. Not too much of a pressure, but still down about 1.5%. So that prepaid calling scheme and the tariff revision there, minor impact. Nothing too substantial on the existing telcos, but clearly the tariff revision or the tariff war has disrupted that uptrend that we were seeing in the telcos starting to form in the second half of last calendar. Somehow has gotten disrupted.
Yeah, and what could be the way to trade really these stocks? Mostly maybe on the downside, Heyman, if you would like to trade at all.
If you look at Idea, Pradeep, we've been down for 5 weeks in a row. And we are at 93.55. The support comes in at 90.91. So I think, and it's oversold, and the stochastic on the daily chart is giving a buy. So one gets a feeling that it's too late to short. In fact, Bharti Infratel looks like a bounce, so that could be a small short-term buy. Could be a small short-term long position.
Well, the other stock which has bounced back in today's session after falling on Thursday, Nifty constituent UPL reacted quite negatively. The numbers actually disappointed the street. The third quarter earnings, the stock was down almost closer to 7%, but some bit of recovery has been seen from those lows of Thursday. UPL today trades around the mark of 790. So, Meet, on the charts, is there any trade that one can take on UPL?
See, on charts, what I can see is that the stock has good support at around 760 levels. So till the time these levels are not taken away convincingly, it's better to avoid sell positions in the counter. In fact, the overall structure is looking good to me. Immediately on higher side, the stock has 200 DMA at around 800, 805 levels. So once the stock is able to give closing above these levels, then we can see move till 830, 840 levels. Overall, in next couple of days or in probably in next 1 or 2 weeks, we are expecting a good upside move in the counter, in which we can see levels of around 830, 840 levels. For a trading perspective, I think one can initiate long positions in UPL at the current market price. Or if there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity. On downside, one can maintain stop loss of around 760 for the upside target of 830, 840 levels. And if these levels are taken away, then in longer term time horizon, we are expecting stock to touch levels of around 902. So for a trading perspective as well as for a longer term perspective, one can initiate long positions in UPL at the current market price.
Okay, that's the view on UPL, and it's 3:15. It's that time of the show when we get you the views from the dealing room, and we'll get you that in a short while. Darshan and Yatin will be joining us with their dealing room check. What are they suggesting in today's session? Darshan, over to you first.
Yeah, so basically, Navneet, what we gather is the fact that a lot of mid caps are seeing a lot of profit booking, but the large caps are something that dealers indicate that you should stick with. So some of the domestic funds are active in JSW Steel. Metals as a pack is doing well over the past few days. Even if you're looking at the base metal prices, they are standing firm. So JSW Steel is one of the stocks that they're speaking about. The next one is Sun Pharma, ahead of the all crucial Halol inspection will start in the second week of February. Some of the HNIs are actively accumulating. They believe that this time around Sun Pharma will be able to escape through as far as the Halol inspection is concerned. And finally, Piramal Enterprises will come out with numbers tomorrow. It's up almost 1%, but the street anticipates a strong quarter this time around for Piramal Enterprises. But Yatin, what are you hearing?
Well, if you talk about Hindustan Zinc, that is one stock wherein there is a lot of domestic fund accumulation. In fact, if you look at the zinc prices internationally, they have inched up on various concerns. So dealers expect the uptrend to continue as far as Hindustan Zinc is concerned. Also watch out for Castrol, and on the basis of future and option trends, dealers do recommend a buy today, sell tomorrow kind of a strategy. And finally, watch out for Weber Global. That stock is quite active in the mid-cap space. Clearly, this is one stock which is standing out on good volumes, and dealers do expect 10 to 15% upside in the short term on the back of HNI action.
Wow, 5% higher, 7.5, 774 and counting is Weber Global. Again, not a trading stock, I would guess, but dealers expect some upsides there based on HNI action. Dharmesh Kant, independent market expert, joins us right now on the show. In a topic of a mid-cap stock, Dharmesh, I'm starting off with that. Do you track this company called Weber Global?
Yeah, good afternoon, Neeraj. No, I don't track this company, Weber Global.
Okay, fair call. Yeah, I kind of have expected there. That Dharmesh, there's a lot of pain in some of these active liquid trading names the last few days. The GVKs, IFCIs, JP Associates of the world, all coming off. Is this a sign of nervousness at the broader end? And what would you be doing if you had positions into any of these, including maybe even an RComp for that matter?
See, all the stocks which you have mentioned, they were never a fundamental buy. Just on the basis of that, some turnaround will happen and things will get better for them. Balance sheet will get better, debt will be removed from the balance sheet without any visibility, good revenue coming into the flow. So the first and foremost criteria for any business turnaround should be, the revenue getting up. So that I don't see happening very soon. What is worrying about this market in totality is the narrowness of the market. In the month of January, if you look at across the globe, all the equities, if you look at be it US, Europe, emerging market, in US, S&P and Dow are up more than 7.5%. Brazil is up more than 12%, Hang Seng is up more than 11%. From that perspective, we have still underperformed, we are up only 5%. But the narrowness of the breadth is what is worrying me. Irrespective of the fact that the numbers of the mid cap and small cap which has come is pretty good, pretty much in line and ahead of expectation. So that has been taken care of. But the type of frenzy which we have seen in most of the mid cap, small cap stocks, I think profit taking is happening as of now. Even in the US market, the Russell 2000 index has not performed the way S&P has performed. 3-4% kind of underperformance is noticed out there. So my own sense is that it's time to stay light take your profits off the table. If you are, mid cap, small cap, even from investment perspective, take 30-40% off the table and be away from the market for at least for 15 days. Let the budget roll out. And today, when the economic survey was presented, I was very much surprised by the mention of the fact that stock market correction can take place, and that can be a drag on the economic growth. At one side, you are talking about a growth trajectory in excess of 7.5% on the GDP front for FY19. And Niti Aayog, the person was very confident about clocking 8 and 8.5% kind of a growth trajectory on GDP. So then, if everything is fair and you're
for an equity investor,
kind of a correction on the index, then why
3 days to
worry?
go for budget. If you were to, if you had to give a call, buying call on one or two stocks, which one would you pick up in this backdrop, in all the policy announcements and priorities expected and being talked about?
See, I would still go with infra pack. The cyclicals would be the bet, and in the infra pack, I think NBCC has corrected quite a bit, so it offers you a good buying opportunity. It's a very good, robust business model, asset light, debt free. Order book is more than 10 times what the revenue clocking per year is there. So that is a strong buy. And apart from NBCC, I mean infra pack, NBCC, L&T, one should be looking into banking space, pure banking play, private sector and public sector banks, buy in 60-40% kind of a ratio. Other than that, be it metals, cement, the other ancillary infra construction companies, one should wait and watch for some time, because the valuations are far too comfortable. They have run far ahead, so let that froth cool down, then one can enter. But yeah, just for the budget play, banking and infra is the two places which one should be buying into.
Okay, stay on, Dharmesh. So much more to talk about, but it's that time of the show when we get in top trading ideas from our experts. Himen, if you had to bet on one stock for the day today, which one would that be?
I'd say STBT on Glenmark Pharma.
STBT on Glenmark Pharma. Pharma itself is looking slightly wobbly as well.
Yeah, just a bit.
Okay, so STBT on Glenmark Pharma is just starting to come off. That's Himen Kapadia's top call. Sumit, what about you, your top call?
Well, I feel that metal stocks are looking good to me, and most of the metals have been a good move. And looking at the chart structure, stocks are still looking good to me. Today, there was some pressure on NMDC, but overall the structure is looking good, and it seems the stock has supported around 140-141 levels. So till that time these levels are not taken away, it's better to be on buy side. One can initiate long positions in NMDC at CMP with a stop loss to be placed at 140 levels on lower side for the upside target of 150 to 160 levels in next 1 or 2 days time horizon.
Okay, those are a couple of the trading strategies from our experts, but there are stocks which have fallen quite sharply, and these are the ones which were actually going up too. So last week you did see battery stocks doing well, and today Amara Raja is down almost 4% in today's trade. Canara Bank too has seen cuts of almost 4.5%. So profit booking in the PSU banking space definitely continues in today's session once again, because Punjab National Bank too has seen cuts of almost over 3% so far. But Himen, Amara Raja battery, just when last week on one of the days, I think we saw strong gains for this counter. A lot of the analysts were turning bullish because these battery makers have not given you that much returns, which we've seen from the other auto ancillary companies. But on the charts, what does it trigger? A sell or a buy? Not a buy for sure, but if somebody had bought, a hold or a sell?
No, it'd be a sell, no need. If it closes at this level today, we're 5 minutes away. I don't know the weighted average, but it would close below the 55-day moving average. The only, I'm not sure if factor which is in his favor is it's down for 14 hours in a row. I mean that doesn't mean anything, but I only mean to say if it's down for 14 hours in a row, there'd be a mild recovery coming in probably soon. But no, closing below 55-day exponential moving average, crossover sell by the MACDs, crossover sell by stochastic on the daily chart. Now it's broken the last 3-4 weeks lows. Looks bad.
Looks bad. Lupin too, 4.5% down. Gale is down about 3.5%. HPBP down 2.5%. There's a lot of pain, even though optically the markets may look okay. Axis, ICICI Bank are down as well. I think the HDFC twins to an extent and TCS are holding the market up. There's a lot of pain and a lot of a clutch of other names out there. OMCs, Dharmesh, if you had exposure, would you take money off the table?
Definitely, much before, if you remember, I have been talking about, crude oil prices shooting up right from $57, $58 levels, and I still believe that, WTI will cross over $70 very soon. So, and there's already been mention of, the crude oil prices being rising. There has been a request from the Petroleum Ministry to the government to lower down the excise duty. So all these things doesn't augur well for OMCs, because they are the scapegoats for any hike in the petrol and diesel prices. So definitely one should not be a buyer. If you have been a buyer, please be out of it.
Okay. Ramesh, we'll let you go on that note. Thanks so much for taking the time out and being with us today on Countdown on Bloomberg Quint. About 2 minutes left for the markets to shut. Call on Lupin, Hemant. Give you a minute to look it up, but it's down 4.5 today. You're talking about pharma looking weak. What about Lupin?
We're at 909. It comes to 900, 905, gives a bounce back to 925, comes back to 880. That's when it would be a positional buy. Too late, too short. There will be a corrective, unsustainable bounce over the next 72 hours.
Okay. And lastly, OMC Sumit Bagadia, would you take any trades here?
I think IOC is looking good to me. Our stock has given a good move today. In last 5 days, we have seen that the stock has given a bounce back from the lower levels of 380. Now it has been quoting at around 399 levels, and from here on there is a possibility that we might see an extended move in which we can see 410 as an immediate target. And if 410 is taken away, then we can see move till 420, 425 levels also. Out of the 3 stocks, IOC is looking good to me. One should select IOC at the current market price and can hold on for next couple of days for the upside target of 410, 425 levels. And on downside, one can maintain stop loss of around 390, 391 levels.
Okay, stay on, Jamin. Much more to talk about, but we'll take in final thoughts post-market close. But let's start wrapping up the markets and start off with Pradeep, who joins in with, of course, all the action on the key indices and the large cap space as well. And Pradeep, Nifty Bank would probably go down as a disappointing trade today.
Yeah, and that has also dragged the Nifty down to some extent. Nifty Bank is closing with marginal gains of just 40 points or so. Nifty is, however, up 60 points to off day's high, closing with gains of 0.5%. But if you look at the market breadth today, there is one breadth if you look at stocks above 5,000 crore of market cap, and another market breadth if you're looking at the smaller mid cap and then smaller stocks. So the small cap index is down by close to 2%. Mid cap index is down by close to a percent or 0.75% or so. Let's see how the market breadth looks like when it comes to index stocks and Sensex 30 shares on your screen right now. Maruti, HDFC, TCS, Kotak Mahindra. So all these heavyweights actually pulling the index higher. HUL and HDFC Bank. Definitely, it's not really reflecting the broader trend in the market because of the concentrated buying at some of these counters. But look at Dr. Reddy's, there is a result reaction, and also several other stocks. But on index, Nifty as well as Sensex, you can say it's still 50-50, not as bad, Navneet, as it looks on the broader market side.
That's right, Pradeep. Deeper cuts seen for the broader markets in today's trading session. And in fact, there were a couple of gainers and losers. Let me start off with the gainers first. So Wayne Life Sciences from the pharma pack was doing pretty well. That stock registered strong gains in today's session. It closed also with good amount of gains. Bulgaria Industries is the other counter, posting very strong set of numbers. And the reaction was seen in terms of the stock price movement today. Bulgaria Industries registered gains of almost 13%. And it actually maintained the gains that we saw at the start when the market opened. Well, the other one reacting to its earnings was Avenue Supermarts. Stupendous set of numbers, double-digit margin growth seen for the first time. But we did see a gap-up opening for Avenue Supermarts. There was some profit booking seen at higher levels. Finally, the stock is closing with gains of 2%. Shakti Pumps was the other counter which registered strong set of numbers. And in fact, the profit growth was pretty strong for this quarter. Shakti Pumps, as you can see, the intra chart is suggesting when the numbers came, you did see the rise coming about. Finally, closing with gains of closer to 7%. Reacting to its numbers was also RS Software. That stock tumbled. There was a degrowth on the bottom line. The company also posted a loss figure of almost 7.5 crores. So 11% cut coming in for RS Software. And we did see weakness actually in the broader market. Stocks which were going up in the past few sessions came under pressure. And one of them is West Coast Paper. Remember, the paper stocks were going up in the past few days. So that was down almost 7.5%. Closing closing at day's low. Group Finance is the other one which saw some bit of profit booking in today's trade. 7% lower for Group Finance as well. JP Associates, high beta counter. It's in the F&O band. What you saw today was probably a result of unwinding, down almost 8%. And also your pharma stocks, Fortis Healthcare was down. Jindal Steel and Power reacted to its earnings. Remember, this counter has registered good gains on YTD basis. So once again, at higher levels, there was profit booking. And finally, Canara Bank too was under pressure for the second straight session. That counter closed at day's low with cuts of 4%.
Yeah, interesting. Navneet, I'm very interested in seeing the volumes picture today. And let's see what's happened there because, well, first day, so we may not have such high volumes. This is, of course, the contributors list. And I think very well documented that the HDFC twins have done well. Pharma hasn't, but equally negating that move is ICICI Bank and Axis Bank, both of which have fallen today. But I'm interested in the volumes coming up before we move back to the Nifty heat map. And the volumes on your screen, wow, that's a far cry. Though, day one, the cash volumes don't look bad.
Not at all, because on an average every month we see volume figure of between 32 to 33,000, and just in last full week, I guess, Neeraj, the cash volume figures were going above the mark of 40,000 for NSE. But let me tell you, on day one, NSE F&O turnover is definitely on the lower side, and I also feel it's a result of exchanges asking the trading members to ask their clients to take more deposit from the clients who have major exposure in the F&O market ahead of that crucial event. So probably it could be a result of that as well.
Yeah, should be interesting. And the heat map should come up on your screen just to show you the color. And the color optically looks green, but I can tell you a lot of nervous energy down there. Some mid cap in the small cap end of the market. Actually, the market breadth should be interesting just before we get back to our guests. If we can actually pull up the market breadth there, this is the sign of what I was trying to say. The broader end of the spectrum hasn't quite looked spectacular, and we're closing in the worst market breadth for the day today. Just a sign of what's really happening at the broader end of the spectrum. This is not healthy, just starting to unravel a little bit, if you will, being held up by a few clutch of large cap heavyweights, but otherwise the broader end people are certainly losing money. Final thoughts from our experts, and Sumit, to you first. How would you trade say the Nifty Bank, because that was looking amongst the three indices the one which came off the most?
From higher levels, it has given some correction, but the overall structure is still looking strong. I think till the time 27,200 levels are not taken away convincingly, one should be on long side. In fact, one should avoid short positions. If 27,200 is taken away, then one can initiate sell positions. But till the time these levels are not taken away, it's better to be on buy side. And on high side, immediately 27,700, 27,900 can be the targets for next couple of days. I think we are going to see a volatility in next couple of days. So whatever trade we initiate, we should initiate with stop loss. And at present, the bias is looking positive. So one should be on buy side in Bank Nifty with a stop loss to be placed at 27,200 levels on lower side.
Okay. Hemant, closing thoughts from you?
I think we've had a run-up before the budget, Navneet. So pre-budget jitters. The only worrisome sign, if any, besides the open interest volatility is last 3 weeks, the mid-cap and small-cap indexes haven't participated, haven't kept in line or sync with the mainline ones. Profit booking is still being seen over there. Sometime down the line, if they don't pick up, they'll probably pull the mainline stocks down, or the mainline stocks will pull the mid-caps up. So I'd say be a bit cautious. Everything is fine, but the rally is narrow. You have 4 stocks holding up the Nifty. Everything is hunky-dory, but I'd say budget at hand, be cautious. But once again, there aren't any significant reversal signals yet.
So no fresh bets on Nifty or Bank Nifty at these levels?
If I were to take a bet on the Nifty, I'd say buy it at around 11,105 with a stop loss of 11,040.
Okay, thanks a lot, Hemant as well as Sumit, for joining us today and taking us through your views on the markets. Well, with that, it's a wrap on this edition of Countdown. But don't go anywhere. Up next, we have a special edition of Ask BQ, where we answer all your budget-related queries. Stay tuned to Bloomberg Quint Live.
where there's life.